So when you take a look at what's happening in the bond market, yields in Germany negative 17 basis points, what's happening over in Portugal and Spain, what do you think?
They look very overvalued compared to, say, emerging market bonds. But it's this flight to safety at the moment, even in Europe.
What about European financials? Because a lot of what the ECB talked about was European financials and their plight and why they are having such a hard time.
Well, I think for various reasons, some banks are having tough times. Largely maybe because of the domination in the investment banking market of the big US banks. Shareholders are questioning whether some of the banks should be in investment banking at all, or whether they should revert back to the more profitable domestic banks they have, or cards or whatever. So I think that's one of the things, plus obviously the very tight margin on rates.
Are the banks overvalued? Or maybe I should put it the other way around. Are there some bargains there? Is it worth taking a look at investing in European banks, given where they are?
I think they look pretty good value, and we're seeing, I think definitely we're seeing really good value there. I think they're being held back by their investment banking activities, basically.
Well, I was going to ask in terms of also rates. So the ECB basically said, we don't think that our negative rates are really hurting banks. It's more their problem. Do you need higher rates to want to actually go buy the banks?
Not necessarily. I think they've got to manage their businesses better, probably. As I say, I think the big issue shareholders have with them is whether they should be as heavily into investment banking as some of them are. But most of them have very, very good either wealth management businesses or commercial domestic banking businesses, which is where the real value in some of these banks are.
Going back to the ECB and what they said, basically what they said is they should be managing their costs better. They should be cleaning up their balance sheets. It's sort of as an alternative to taking on more risks for the investment banks as a way of going at it. Are some people doing that? And are there really some political concerns? When we talked about the Deutsche Bank, Commerzbank, there's a lot of problems. You have to lay people off. Well, that's a way of getting your costs down. And yet people over in Germany said, no, you can't do that.
Yeah, well, Germany's a special situation, as you know. It's very difficult to cut costs in Germany compared to, say, the US or even the UK. So, yeah, they have to look at their cost base. They have to look at the non-profitable assets they're holding on their balance sheet. And that's where shareholders are expressing concern with some of the bank's managements.
So I feel like when it comes to ECB and what other action they have, we talk a lot about TLTROs, the long-term loans for banks on the cheap. Do you feel, there's two schools of thought. One is that that's the big bazooka, that Mario Draghi can come in and just sort of really stimulate the economy. The other is that the demand just really isn't going to be there. Which do you think it is? Well,
I think the issue is the demand is not there. The low growth is really what's hitting the banks as well at the moment. And as the Vice President of the ECB just said, growth is just above that 1% level. We need to see a bit more growth in the Eurozone.
Are we going to see fiscal stimulus? Because that may be the only way left. Certainly the ECB can't do a whole lot more.
I'm not convinced they can do much more. I think we now have to trade our way out of this, or grow our way out of it.
What kind of fiscal stimulus then would be needed? Because it feels like there's not the political will to do that.
I don't think there's a political will, and I'm not convinced there's much more firepower they can throw at fiscal stimulus. So I think it's about now running the businesses better, running companies better, and growing.
And how much pressure does that put on the political institutions in Europe as a practical matter, whether it's at the European Union level, which we've seen certainly through the parliamentary elections, but also the member states?
Well, I think the recent elections have shown that the populist movement didn't do as well as everyone thought they would. So I think they're not under as much pressure probably as they say in the UK political situation where we have the Brexit Party doing so well in the elections.
The 6-day-old Brexit Party or something So if we just sort of take the big picture then, we started talking about bond yields and we have the European growth story. When you look at what's happening in the bond market, do you see it as as a CEO, you want to go out there and borrow for cheap and invest? This is the time, look for value, search for yield, or is this a time where you need to retrench because it is saying something about the global economy?
Well, I think you've got to look at opportunities elsewhere, really, from European government sovereigns. I would look, as I say, emerging market sovereigns, and when I look at which funds are selling the best in the US at the moment or globally, it'll be emerging market sovereign, emerging market bonds, where there is value and real returns, basically. So India, China, these sort of markets.